My name is Joel Rosenberg, Director of Business Development and Strategy for VC Task Force. VC Task Force is an organization where the venture community comes together to address critical issues, provide workshops, and other events for the benefit of the venture and entrepreneurial communities. VC Task Force provides access to an extensive ecosystem of VCs, CVCs, and angel investors. You may ask questions anytime during today's event, and time permitting, they will be answered live after today's interview. It is my pleasure to welcome Gary's Picks host, Gary Fowler. Gary is CEO and co-founder of GSD Venture Studios, an award-winning growth stage AI venture studio. Gary is also co-founder of the award-winning AI startup Yva.ai, as well as the investment firm DY Investments. Today, Gary will be interviewing special guest, Dr. Holger Bartel, CEO and founder of RealRate. RealRate is a rating agency deploying explainable AI, or otherwise known as XAI, to create fair, unbiased, and ethical company ratings. RealRate avoids the black box effect by making the AI reasoning transparent to its users. RealRate features tools that include colored, casual graphs to highlight the real underlying sources of financial strength, making the results quickly and easily understood, eliminating the large amount of time required to read through detailed annual reports. Holger is a serial entrepreneur. His experience includes being an appointed actuary in a large German insurance group. Holger received his PhD in statistics. Based on his research, he founded several fintech companies driven by changing markets deploying new technology. It was during his time as an appointed actuary in the insurance industry that Holger was engaged with key rating agencies, where he came to understand the shortcomings and challenges needed to revolutionize the insurance rating industry. Take it away, Gary.
Thanks, Joel. Great to be here again on VC Task Force and with our amazing friends and our viewers. So thank you very much. My name's Gary Fowler, and I'm a serial entrepreneur. I've done 17 companies. I was on the original management team of Click Software, which was sold to Salesforce about 21 months ago for $1.35 billion. And I'm also the co-founder of Yva, as Joel said. I love artificial intelligence and quantum, and I love making a little dent in the universe. So it's with great pleasure that I introduced Dr. Holger Bartel. And Holger, it's great to have you on my show today. So great to see you. And I have a question for you. It's really interesting. How in the world do you go from being a commercial teacher, to getting your PhD in math to where you are today as CEO? How did you, and founder of a company, how does that happen?
That's a nice question. I could tell you. Well, first of all, thanks for having me here and for that great introduction. Much appreciated. So you need to know, I'm very interested in figures and numbers and made my PhD in statistics, but I'm coming from a teacher's family. So my father was a teacher, my mother is a teacher, and I think I got it. And when I was studying, I really was focusing on statistics and analyzing data, and I loved it. But at some point in time, it got too much, and I wanted to interact with people. And that's why, in addition, I studied to become a teacher. Sometimes nowadays, I'm giving seminars for employees of insurance companies, and I teach them accounting. You might think that's not very interesting, but I like it, and I think they like it too.
Well, I was reading that you were also a tutor, so you wanted to be around people at the same time. So as you were doing your statistics, you're also a tutor. That's amazing. So tell us a little bit about RealRate and what's happening with RealRate and where you are today.
Yeah, so RealRate, we are a rating agency, but we are totally different to all the rating agencies you might know, like Standard & Poor's and Moody's and Fitch. These are the big US-based companies known worldwide, but they have a very slow, interactive, cumbersome rating process. So if you are a company and want to get a rating, you are hiring them, and you need like several months to get a rating. You need to pay tens of thousands of dollars to get a rating. and you need a whole staff, like 3 people full-time, in order to be able just to provide all the internal data. And of course, their approach is fine, but we see one big problem with them. Unfortunately, they are totally biased. Why? Because you as a company, you are paying them, and then they are under pressure to provide a good rating. And maybe let me tell the story. The moment when I learned how biased the ratings are, that was when I was working as an appointed actuary in the insurance industry. And one day the big boss came in, and so we were talking to the rating agencies, and he told them, listen, I'm expecting you to give me a AAA rating. If not, there are plenty of other rating agencies out there. And then he left, and that was all. And at that moment, I really understood the rating won't be fair, but totally biased instead, of course. It's like a pupil paying his teacher to give him a grade. That's totally crazy, and we're talking about a $10 billion market.
Wow, that's interesting. So like paying a teacher to get a grade. Well, I'm sure in some countries it happens though, you know?
Could be, should not.
So no, that's interesting. So how do you go down through? What are the mechanics in terms of making it so it's unbiased? It's very interesting. So how do you do it?
Let me explain it by first showing you what normal AI can't do. For example, you in the US, you have the self-driving Uber cars. And unfortunately, 2 years ago, there was a fatal accident and the Uber car hit a bicycle driver and she died. Of course, that's a terrible accident and it was investigated. And the researchers asked, why? Why did the car hit the bicycle drivers? And they checked everything out. The point is, when you're using an artificial intelligence, you get an answer. But the intelligence itself could not explain why it really took such a decision. Or let me give another example. If you want to apply for a loan at the bank and you get rejected, you will ask immediately, why? What happened? Why didn't get the loan? And the bank in general can't answer that question if it's just using a bunch of key ratios. And even if the bank tries to give that answer, it's very dangerous. It could be biased and there could be some discrimination with respect to gender, age, or ethnics. So we really have a different approach. We provide a structure imposed on the neural network. It's like an expert model we start with to train the model. And using this technique, we make the AI explainable by design, not afterwards, but from starting it, we ensure it is explainable afterwards. And that's the major difference. And I think everyone knows and talks about AI, and there are many people not trusting AI. And we could add a lot to trust AI, which is important if AI is interacting with humans.
Mm-hmm. Yeah, I mean, that's absolutely right. And you look at it around us, Holger, today, there are about 40 zettabytes of data around us. And if we look at, what does that mean? That means that if we stack CDs or DVDs one on top of another, it would go back and forth to the moon 29 times. And so we're inundated. In fact, Alvin Toffler came out with the term infobesity. So we are inundated with information. So having tools like yours that can help is really important. So what you're doing, so what kind of customers are you looking at? If you look at, the top 10, who would be the top 10 global potential partners that would be really interesting for your companies?
Yeah, let me add on the big data point you just mentioned first. Indeed, that's another difference. Normally you have big neural networks and you need to fill in millions of data. In contrast, we have a structured neural network and we can work with less data. It's like small data, not big data. For example, we had a product market test in Germany 1 year ago. We've been ranking 60 German life insurers. Say, if you just have 100 key figures from all of them, It's just some thousands of data and not millions of millions. But given the structure we have, we can exploit and deal with small data too. So that's another advantage. So we are addressing big corporations having hundreds of thousands of customers. For example, insurance companies or banks, could be other industries too. These companies, they are very complicated to understand. If you're a small customer, you will never understand how a bank or an insurance company is really working. And you need trust. And you need to have an independent agency really computing the fair financial strengths. So we are addressing like the marketing departments of these big companies. They are used to spend millions of euros or dollars for marketing campaigns. And if we address them and saying, congrats, we've got news for you. We've been ranking your whole industry and you got position 1 out of 60 companies in your industry. Would you like to share that great news with your customers? You can subscribe for the real red seal of approval, put it on the very top of your website, and build trust with your company customers. That's how we do it.
Yeah, but what happens if at their bottom, they're not 1, but they're 60? Are they going to want to have that sense of approval or not? You know, it's like having a doctor, the one in the first of the class and the one in the last of the class. They all graded from the class, right? So it's interesting who's going to want it. Maybe the top 10, but what about, after that? So it's interesting, right? What do you think?
So we want to be transparent, and most rating agencies just publish the good results. But of course, customers are in need to learn about the whole truth. So we have like a football ranking table with your top company on top and the last one. Yeah, so that's how it is. That's how life is. And we will be so transparent publishing it all. But even if you're in the last place, you could learn a lot from our services. For example, we can really tell them what to change in order to overtake the competitors next year. And that's an important information we provide, given a nice colored graph. We call it causal graph. It's like a tree with red and green bubbles. The red ones are your individual weaknesses of that company, and the green ones are the strengths. So you can learn from it and you can understand it and you can improve. And next time you might be able and might want to buy our rating even.
Oh, I like that. So basically, if you follow the steps and improve, you can get a higher rating next year, right? So it's basically tutoring you or mentoring you, kind of like some of the things you've done in mathematics to be able to help you get better.
Of course, risk managers love what we show them because that's exactly what they have to do, fine-tuning how to optimize the asset allocation and balance sheet reporting and all that stuff to finally have a high financial health. That's what's most important in the finance industry, at least.
No, that's interesting. And I can see the kind of application across the board. I mean, there's a lot of things that need to be rated, whether it's employees in a company. I mean, there's a lot of different ways to rank. It's very interesting how far out that will go. So what exact vertical markets, if you could look at the top 3, what are the top 3 vertical markets for you today that are interesting? And then what's the future of Real Rate?
So we are still a startup, and we joined the GSD Venture Labs program 3 months ago and learned a lot. When we started, we were really focusing to be a rating agency and selling rating seals. But very early on, we learned from your mentors, listen, you really got a great, innovative, cutting edge technology. It's called explainable AI. Why are you just limiting your universe to just selling rating seals? There's a lot more. And indeed, now what we have on the agenda is, for example, providing internal credit ratings to banks. So we are in contact with Deutsche Bank and Bank Gazella, for example, to test that one. And there's even more. We could help M&A lawyers, so the mergers and acquisitions business, to check companies to be bought, because you have the data room. Once it's opened up, you need to be fast, put in the data, and want to have evaluation. So that's an important task too. And we're even thinking of setting up an AI investment boutique in order to provide the asset managers with an additional source of information, not just fundamental analysis and technical analysis, but an artificial intelligence analysis on top, which would improve their performance for sure. So there's a lot. And maybe we could even leave the finance industry and talk about health data used by doctors. Doctors need to judge the data to say what disease is it, and to be able to explain it afterwards, why they are thinking this is the disease. And that could be automated too, because all these processes I just mentioned, they are not automated, they are expensive, slow, and human-driven, and maybe
absolutely.
biased.
So when you look at it, so you can, just walk me through this. So you've got, Deutsche Bank. What kind of things are you really looking at though? What are the kind of categories that you're rating? So what are they looking at, and how are you rating them?
So with Deutsche Bank, they are very innovative. They have an API they are opening up for startups and fintechs especially. So that's what is called open banking. And they have data of private customers. Of course, they need to be GDPR compliant and all that. So in that case, the business model would be, there would be an app, and a private person could provide his transaction data to Real Rate and ask them, please rate me. I want to buy a car. I need a personal rating now. So like I'm now standing in front of the car and want to buy it. Just taking that, giving us the data, and 5 minutes later on having a good credit rating and buying the precious car. So that's the story behind.
So how would you compete, Holger, if you look at the current Experian and some of the credit rating systems? How do you compete? Because I could see they could also come back and say, oh, here's your credit score, it's 780 or 750, and do it in a short period of time. What's the difference that kind of a credit score and what you have? How does it? What's the value of it to the customer in the case of buying a car?
Yeah.
What does it give them?
So first of all, the big rating agencies, they are not rating persons and small companies. Just big companies can afford to have a rating. So that's the first point. Like 90% of the world is totally underrated and never got a rating at all, because creating a rating is expensive, and nobody would do it for purchase of 100 euros, but we can if it's automated. And of course, in a sense, we're competing with S&P and Moody's and Fitch, but not really directly. And indeed, some persons warn us, like, if you are attacking them, you are attacking the pillars of US capitalism, because everyone accepts what they say. Still, we do not accept it. For example, if we just have a look on the last financial crisis, I do not mean the COVID crisis, but the 2008 crisis. It was a financial debt crisis. And in a sense, it was a rating crisis too, because they've been trading very complicated, structured capital market products. It was restructured again and again, and one layer on top. And the rating agencies gave it a AAA, and everyone was confident in it until the market crashed. And then the people at the first time had a look into what they really bought, and it wasn't AAA. So the 2008 crisis could have been prevented maybe if all the ratings would not have been so totally biased as they were. So we are really looking forward to improve the world a bit and making it a little bit more stable.
And how would you go about it? Let's talk about that exact situation where they've gone down through and they take these derivatives and change. What approach would you have? How would you look at that same kind of scenario?
So, of course, we have a great AI technology, but there's even a simpler trick. So we reversed the rating process, really turning the rating markets upside down. So what we do is we do the work first. We are rating all companies within an industry. And then once we got the rating, afterwards, we are addressing just the best rated companies and offering them to buy the seal. So we are not under pressure to provide a good rating to a specific company. We are really independent. And next year, another company could be best rated. Doesn't matter for us. We
So
still are independent.
You're rating them in advance. You're not getting paid before the ratings.
That's it. And that's totally different.
So are you going to be paid on a year-to-year basis, or how does it work? Because if I was your customer last year and I would come up the next year, that could also be looked at as a different kind of transaction too. So do you have it set up so that every year they pay differently, and then once they're rated, they got the number 3 position in all the world in X, and here's your rating. We'd like to give you this rating. And where's the cutoff? How do you decide somebody's not rateable, right? Or it's not interesting? Where do you cut it off?
Yeah, so we are just offering the top 20% within each industry to buy the real rate seal of approval. So if a customer sees the real rate seal, he can be sure this is a company in the top 20%. And still we need to do a new rating every year because we get new financial data each year. We are inputting publicly available balance sheet data into our model. And still we will in future sell a subscription for the real rate seal of approval. So it could be the case that number 1 in this year is just number 6 in next year, but that's how it is. And we will give that stamp on the seal and say, it's this year, it's that position. You are free to use the seal. If you don't want, that's fine for us.
And what about the companies that aren't rated, Holger? Let's say you have 10 that are in the top 10 to really 100. Will you train those and mentor the other ones to help them get their ratings up?
Yeah, so we've been addressed by some risk managers from those companies because they wanted to learn what's wrong with the company. And sometimes they already knew it, but sometimes it was a really new insight for them. And we could do so. For me, it just takes a click to see this nice colored graph. And I could tell him within just 2 minutes what's going on in his company. So sometimes I know better what's going on than the persons working for the company for 20 years, say.
Are you going to have the system set up so that can it go down through and train them on its own? Can it use semi-supervised or unsupervised AI to actually train the people to help them get better, point out the areas, evaluate? Could it consistently monitor that particular company and start giving insights all the time? Change this, you want to look at this, etc. Can it do that?
In principle, it could do that. Say, for example, if market prices are changing, all we need is to input not the book values, but the market values for that company, and you would have an updated rating. But we are not providing the software. We are providing the results and the seals and the explanations. So it's our software. We are just using it for our business purposes.
No, that's great. All right, so we're coming up to the top of the hour. So what advice, if you look at one thing, you're a serial entrepreneur, you've been successful. So if you're talking to companies, other companies from Germany or the European Union or all over the world, what's one piece of advice you could give them coming from, as a mathematician and a teacher to where you are today? What's a piece of advice you would say that helped you move forward?
So there's one thing I just recently learned. So I've been founding some startups, and all of them were fintech startups. One was a robo-advisor, another one was a blockchain company providing decentralized betting markets, and now I have Real Rate. The first companies just were German companies, so it was a team all in an office, and we worked together, and we had local clients. at least in the first years just. I'm taking a different approach with Real right now, having two reasons. First is I learned from COVID. So a decentralized working worked much better than I could have ever imagined. So we have a lead developer in India, we have a CTO in the Netherlands, a designer from Russia, and all the others are in Germany somewhere. So it's a decentralized team. We do not have even our own office. That's the first lesson I learned, and it works. And the second one is I tried to go over the borders, and with the help of GSD, indeed, thank you, we founded Real Rate Inc., based in Silicon Valley, just opening office this month. So to be honest, I'm very proud that I could say we are a Silicon Valley based company. It's a whole different story and a different state of mind right now. And I would advise just give it a try, not invest in risk too much, but give it a try. I'm really looking forward to the US market.
Excellent. And what about raising money? Are you looking to raise money right now? Where are we with that? We have VCs from all over the world listen to my show. Where are you with that, and what kind of ways can they help you?
Yeah, so just now we have a small business angels round. You need to know I'm a modest German guy, and if I'm talking to you US guys, every number needs to be multiplied by 10 at least. So that's the way you think. So we have a small round raising smart capital from business angels, 100K to enter and speed up the US market entry. And although just tomorrow we have the big demo day at Startup Bootcamp Netherlands, I already got 3 business angels committed, so it's not much free float left for the rest. So it seems to work. But by the end of the year, we would like to have a small Series A round. Indeed.
And how big do you want the round to be? What are you looking at?
So we are looking maybe like at least 2 million, maybe up to 5 million. That's what we are looking for.
All right. So Holger is looking for 2 to 5 by the end of the year. There's some room in a seed round. Holger, it's great to have you here. Really appreciate you taking time out of your busy schedule to join us and join our team. I'd like to thank everybody from the VC Task Force team, specifically Joel, for being amazing in June and hosting us. So I'd like to thank our viewers for tuning in. Stay tuned for the advice. We'll be back again in 2 weeks. It's great to have you here on Gary's Picks. Thank you very much and have a great day.
Gary, thank you so much. Holger, is really your passion and the area that you're focused on is really interesting. Our viewers, this is something that's going to be very interesting to our viewers and investors as well. Thank you so much. Gary, thank you again for a great event. We look forward to seeing everybody back in 2 weeks when we have our next Gary's Picks event. So thank you. Until then.
Thank you. Bye-bye, everybody. Take care.
Yep.
See you. Bye-bye.
Thank you. Bye-bye.